Hello and welcome to Deal Flow, the show where we look into the intricacies of deal making on the African continent. I'm Erica van der Merwe. Chile's CFR Pharmaceuticals has made a formal offer for JSE-listed pharma group Adcock Ingram. The cash and share offer for 12.6 billion rand would rank as one of the more significant inbound investments into South Africa in recent years. There are a few wrinkles in the transaction process though, with the biggest shareholder in Adcock withholding its support for now for the deal. We look at these developments in this week's show. First, a look at the deals of the week. Fixed line operator Telkom SA is in talks with some parties over the future of its struggling mobile business, its chief executive said after the company posted a jump in first half earnings. Nampak has agreed to pay $301 million to buy a Nigerian beverage can manufacturer, plus an option to purchase a plastic packaging facility. The acquisition of Alucan Investment forms part of the packaging firm's stated intention to boost sales from outside its home market. GlaxoSmithKline recently completed the sale of 28.2 million shares in Aspen Pharmacare at 250 Rand each, raising gross proceeds of 7.059 billion Rand. Goldman Sachs and UBS bankers say Britain could not have sold the Royal Mail Postal Service at its current higher price, rejecting accusations that one of the biggest privatizations in years had shortchanged taxpayers. Chile's CFR Pharmaceuticals has made a formal bid for JSE-listed pharma group Adcock Ingram, saying it was confident of winning support for the deal from its target's shareholders. The fate of the deal is in doubt, though, following news that Adcock's biggest shareholder, the Public Investment Corporation, will not support it. In studio with me to discuss the deal further, I have Andrew Thompson. He's a member of the Adcock Ingram Independent Board, as well as Jean-Pierre Verster from 361 Asset Management. Welcome to both of you.
Thank you.
So Andrew, what's your feeling? So we've had the announcement from the PIC. So my understanding is that they've got an 18% shareholding in Adcock Ingram. Is this a deal breaker?
Well, we'll see. We are actively engaging with the PIC to understand their concerns, and our job is to address those and try and put this to the vote of shareholders so that they can exercise their democratic right.
Yes. So the PIC, the wording, if I recall correctly, is in this form of the deal's not attractive to them. So is that a signal to rethink it, to reshape it?
Yes, we're trying to understand that more thoroughly. The primary public statement that they made was the non-binding form meant that they could not even opine on it, and it was important, therefore, to deal with that in the first instance, which is what we have done.
Jean-Pierre, 361, where you work, is a shareholder in Adcock Ingram. I understand that you have supported the deal. So what's your thinking on why it is attractive?
Yes, we have signed irrevocable undertakings to vote in favour of the deal.
So what does that mean, irrevocable? Does that mean absolutely you'll tick the box on the day?
We have contractually obliged ourselves to vote in favour of resolutions that will be tabled at the general meeting to vote on the deal, where they need 75% support. And we are some of the shareholders, which in total now is 36% of the voting shareholders that have given irrevocables, that said they will vote for this, which is 46% of the actual number of shareholders in terms of the shareholding of the company. Because the BE players can't vote, it's 36% of the actual eligible to vote shareholders. So we're part of that group. And the reason why we like the deal is because of the facts on the table. It's at a significant premium to the last traded price before the deal was announced, above 73 Rand. If you look at the CFR share price lately, around 75 Rand even, depending on the split between cash and shares. We see the significant synergies between CFR and Adcock that will create further value, so therefore we are quite comfortable holding CFR shares after the deal. And as custodians of our clients' money, we feel we have a fiduciary duty to apply our minds, which we have done. And it's clear for us that this is a good deal for shareholders.
Andrew, just a technicality on the support for the deal. If you Google the deal as it stands now, what does come up is someone is laying a complaint against you for overstating the support for the deal. But I think it probably brings in the element that Jean-Pierre brought in now. So the actual support of the deal is around 37% compared with what you had said, 45%. So it's the differential, the BEE voters.
Yeah, we've clarified that. We stand by our statement that we had 45% support in irrevocables and letters of support. But that did include the BEE shareholders. They have supported in the deal in that they're going to stay on to maintain a BEE shareholding in Adcock Ingram. And they have agreed in favour of CFR that they will not vote those shares at the scheme meeting.
Jean-Pierre, just going back for your rationale for 361 in supporting the deal, one of the elements that I see is that because it's a cash and share bid, that the CFR shares trading at a far higher valuation, for instance, in Adcock Ingram, so overvalued, so it's perhaps not such an attractive currency with which to make this bid.
That is what some shareholders have said publicly. We don't quite agree with that. I think if you just use PEs as a measure of valuing companies, it's quite a rule of thumb that is blunt, and therefore we look at further metrics, including the growth of the company. So CFR have shown significant growth, a very good track record. They made some acquisitions recently in Colombia, for instance, in Vietnam. They're rolling out their footprint throughout South America and the rest of the globe. So that excites us, and we think that that's further growth of earnings that will come on the back of that. So we are not concerned about a high PE. If you just look at Aspen on our local market, that's on an even higher PE, and people are quite happy to buy into that at the high PE. So if you look at high PEs, look at it in relation to growth, and we see a lot of growth in CFR's prospects.
Andrew, just going back to the fact that you've had some bids, and from what I understand is that you're not obliged to publicise all the bids that you've had. Is that correct? So we know about Bidvest, we know about the private equity group Actis and now CFR. Have there been others?
Well, if I may just dwell on the process, Erica, we did have some bidders who requested that their identities not be publicised. But as a process, if we go back to the unsolicited approach from Bidvest in March, we published that in full. We then discussed the situation with shareholders, and they were adamant, I think is the right word, that we looked at ourselves and our situation and plumbed evaluated interest in the company very thoroughly. We decided to do that in a transparent and fair process, and we kept shareholders informed along the way, shareholders like Jean. But it was important for us to put something concrete on the table, and so the process we are very comfortable with. The outcome, I think, is a very good one for Adcock shareholders. If one looks at the valuation metrics, and John has covered those, the execution risk, there are conditions precedent that need to be satisfied in a deal like this, and CFR have gone a long way to satisfying those. What remains is shareholder support and regulatory approvals, both here and in Chile. And then the benefits for South Africa are very substantial indeed in terms of exports, manufacturing, and the BEE shareholding. So across a lot of dimensions, this is a highly attractive proposal for shareholders.
Now, I know you're on record and you've done many media interviews on why this deal is attractive, etc. But are you willing to sort of almost say the opposite, why the Bidvest deal was not attractive to you, why a private equity deal is not attractive to you?
Well, on the Bidvest proposal in March, we issued a very thorough response to their proposal. And the main things were that it wasn't even competent as a proposal. And we asked Bidvest to deal with that, and until now they've not done so. So it's quite difficult to opine on something which is not even binding. As far as Actis and its common cause, that they made a proposal on these dimensions that I've covered on the CFR transaction, the CFR proposal was head and shoulders above what Actis proposed.
Jean-Pierre, just looking at the pharma industry as a whole, so we know that Adcock Ingram has underperformed relative to some of its peers. So do you think this particular deal, what it proposes to scale up the business, so the new combined entity to be far larger, huge emerging market exposure, I think to 23 markets, and sort of an ability to cross-sell to each other's markets. So does this create, in your opinion, a far more viable entity?
It does, and I would add to that the fact that they are at quite low capacity utilization levels in the manufacturing facilities. facilities in which they've invested a lot of money since the unbundling of Tiger Brands. They were underinvested previously and they needed to catch up, get all the accreditations they needed. And with a takeover of another pharmaceutical company that can move some of their manufacturing to these facilities, it means your capacity utilization increases. That means your cost of production per unit decreases. You have benefits of scale. You have more employment, so good employment opportunities locally. You're going to invest more into local machinery in the local industrial sector. So a host of benefits that we see from the combined entity, including the fact that more manufacturing will be moved to South Africa.
Andrew, you've issued a recent trading update with results out on Wednesday. So on the face of it, it doesn't look fantastic. Turnover will be higher, but you've warned of margin pressure, weakening currency, so the input costs are higher. It's a hugely competitive environment globally. Any words of encouragement for shareholders?
Well, as we said in the trading update, it hasn't been easy, and that's been the case for some time at Adcock, but we must take responsibility for that. But against that background, these things that Jean has spoken about, the synergies in manufacturing, access to new markets, and also we haven't touched on access to new products out of CFR's product pipeline. These are the sort of things that can rapidly change the game for Adcock in the merged entity. So if anything, the ability of this deal to deal with these challenges that we faced makes it particularly attractive.
Jean-Pierre, but has the deal become a theoretical, an academic one? Can it still happen if the PIC does not budge, seeing that they need 75% support?
So the PIC owns 18%, but 14% of shareholders, the BE shareholders, can't vote. So effectively, the PIC have got 18 over 86, so closer to 20% effective voting shareholding. So with still less than 20, it means they're not at over 25. They can't block the deal on their own. But I think, and Alejandro has announced that as well, he would really like to see the PIC supported and effectively.
Alejandro, the CEO of CFR Pharmaceuticals?
Correct, yes. So effectively, even if they should vote against and it can still technically go through, he'll probably not proceed without the PIC support. So we want to see the PIC on board, even though technically it can go ahead without them.
And Andrew, perhaps just a final statement from you. What does the future look like for you? There seems to be a lot of uncertainty. It looks as though the board has managed the process rather well, has made you available to have these discussions, for instance. So the focus remains on operations.
Yes, I mean, we have said that it's been quite disruptive, all of the effort that's needed to make a choice and develop the choice with CFR, but that's a price that we think is fair to pay for shareholders. Our focus now is in bringing this to shareholders in a form in which they can vote on it and define the future for this company.
Well, Andrew, thank you very much. And Jean-Pierre too. Andrew Thompson is a member of the Adcock Ingram Independent Board, and Jean-Pierre Verster is from 361 Asset Management. And that's a wrap of this week's edition of Deal Flow. Do tune in again next week to get the latest news and views on mergers and acquisitions in Africa and beyond. Until then, from me, Erica van der Merwe, it's goodbye.